It's no doubt that the gold market has been heavily influenced over the past several weeks over concerns on the British referendum this Thursday. Joining us to talk commodities today is Jeff Christian, Managing Director for CPM Group. Jeff, good to have you in studio today.
It's good to be here.
So we're talking ahead of the Brexit, and your firm put out a really interesting note on the impact of Brexit on gold. But you say regardless of the outcome, gold might not benefit here.
Well, I think gold has benefited from the referendum because of the uncertainty. And once the referendum is done, the uncertainty goes away. So if it's a vote to remain, gold would come off perhaps more sharply. But if it's a vote to leave, the uncertainty is behind the market. And the idea of Britain leaving the EU is not all that critical of a factor. So we think that regardless of how the vote goes, once the vote is behind us, the uncertainty factor is gone and gold comes off.
So where are you looking for support for gold?
We're primarily looking at 1220. We still think the potential for a price drop down to 1180 or possibly even a little bit lower over the period of July and August is possible. But right now we think the strongest support's probably around 1220. And we have seen some pretty strong demand in some parts of the world.
And we're so focused on Brexit, of course, these days, but are we missing the bigger picture? What's really impacting gold?
Well, a lot of it's uncertainty, and one of the things that we saw last week was, clearly the British referendum was probably the major factor, but the FOMC minutes and comments last week that they weren't going to increase interest rates and that they were very much concerned about the weakness in the economy actually was a major factor. I think the U.S. election process is a factor, and you have a degree of other uncertainties going on around the world. All of those things have been factoring into supporting the gold price, and then offsetting that is the fact that there has been a backing away from recession fears on the part of financial markets.
Let's switch gears, talk platinum group metals, platinum and palladium specifically. You launched your yearbook earlier this week, which really focuses on the long-term trends for the metal. Now, palladium's up 5%, platinum's up. Are they benefiting from Brexit?
I don't think it's the Brexit vote that's benefiting platinum and palladium. Part of the factor, there's been a sea change in investor attitudes toward commodities. Across commodities, and especially industrial commodities. So I think that platinum and palladium are benefiting from that. The prices had been hammered down to extremely low levels. South African producers continue to suffer for a variety of reasons. And I think that you've got any number of investors who, have been liquidating their short positions over the last 5 months, or the first 5 months of this year. And you also have some people rebuilding long positions. So I think it's more idea that, again, we're not going into a recession in the United States. China's not going into a recession. Auto demand, which is particularly strong in China and the U.S., is good for palladium, where they use gasoline-powered engines and they use palladium-intense catalysts. So I think it's more of an industrial story and a lack of recession fears that's been helping platinum and palladium rise.
When I was at your yearbook launch, I also remembered the talk of $10,000 rhodium. You remember those days. You also mentioned the South African presidential election and how that could be a game changer for the PGMs. Now, it is in 2019, further down the line here, but how could that play a major role here?
Well, there's a great deal of uncertainty in South Africa about the political future of the country. And the ANC, which has dominated politics since 1994, is at risk of fracturing. We've already seen the EFF spin off. The leaders of the EFF originally were ANC members, but even within what remains of the ANC, you're seeing further fracturing. There's a lot of discussion. Zuma has really alienated major portions of the ANC voting bloc, as well as other parts of the South African electorate. So you have a variety of political issues that are slowly playing out. And the presidential election in 2019 is clearly part of it, but part of it is, the calls for the EFF's calling for nationalizing natural resources. You have very militant unions. You have a tremendous amount of political uncertainty there. And that's causing foreign direct investment into South Africa to plunge to the lowest levels since apartheid. And it's causing domestic investment to really pull back and wait and try to come to some terms with what the future of South Africa is.
So would that impact supply and then in turn help
Yes.
the PGMs?
It's definitely causing less capital to flow into the South African platinum mining industry.
All right, Jeff, thanks so much for stopping by.
Always a pleasure.
And thanks for watching this edition of Kitco's Gold Report and PGM Report. We'll see you tomorrow.